Hello, and welcome to Pro Trader Strategies Market Commentary for Wednesday, May the 3rd. My name's Eric Wilkinson. It is FOMC day. Please keep in mind... Hello, and welcome to Pro Trader Strategies Market Commentary for Wednesday, May the 3rd. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. A little bit of economic data today. We also get the FOMC results, two-day meeting. Today's the day where they come out and tell us whether or not they're going to raise rates. It is expected that there is going to be no increase in interest rates. So that kind of goes along with the economic data we're seeing. So they also just raised the last meeting, so they're going to hold off probably one or two meetings. Actually, we're starting to see that interest rate being at 1% right now was looking to be at 1.25 to 1.50 by the end of the year. That's kind of being taken out of the cake in a sense, where it's probably only about a 50-50 shot on an interest rate increase by the end of the year. So keep that in mind. Anyway, on to the overall economic picture. We had Great Britain's construction PMI come in at 53.1, which was slightly higher than the expected 52.1. We also got the European flash GDP came in at 0.5%, right in line with expectations there. They did lower last month slightly to 0.4%. And then European PPI came in at negative 0.3. It was expected to be a positive 0.1. So a bit of a pullback there, kind of consistent with what we're seeing. Then here in the United States, we got ADP non-farm payroll came in at 177,000. We also got final services PMI, purchasing managers index, came in at 53.1. Now remember, PMI purchasing managers index, we're looking at the service sector now. We've already gotten our manufacturing PMIs. Those were a little bit lower than expected. Services PMIs came in a little bit higher than expected. So we also got the ISM non-manufacturing PMI came in at 57.5, expected to be 56.1, again higher than expected. Then we got the crude oil inventories, a drawdown of 900,000 barrels, was expected to be a drawdown of 3.3 million barrels. So pretty bearish across the board on that crude oil inventories number. A lot of lack of demand across the board from gasoline to distillates, which kind of is indicative of what we've been seeing in those manufacturing PMI numbers. Distillates are what goes into a lot of the manufacturing processes. So a bit of a pullback there. And as I mentioned, we have the FOMC later on today at 2 o'clock Eastern. Usually comes out slightly after 2 o'clock. So they really can come out at any time, but when we had Greenspan one time talking about the risks involved in the Fed not being fully transparent, in a sense that created a lot of volatility in the market. So if they came out with a specific time that they would release that economic data point, that would be a lot better for the market. So they decided to do it at 2 p.m. Eastern, which gives everybody a little bit of time to sort out the news and trade on that. So anyway, moving forward to the overall markets. Crude oil down. It was actually up on the day until we saw that economic data point, and crude oil started falling back below this 38 Fibonacci level that I've been talking about. Yesterday it kind of pierced below that as well, but late afternoon rally, and with the data points today, it's kind of pushed back below that level right now. So Settlement below that is going to really show that the bears are in control there. Gold futures coming off slightly by about 7 points, but it's still right there at the point of control, which is where the most time and volume has been spent. But we need to keep an eye on this 50-day moving average. It's below that right now, which is signaling more bearishness. So this 9-day moving average getting ready to cross over. So we're seeing a lot of back and forth as we go across here. The market really trying to discern which direction gold's going to go. But as of right now, we're still slightly bullish with these two 50-day moving average being above the 200-day moving average, despite the fact that we're seeing this bit of a pullback here. Then on to the bonds. Bonds are pushing just a little bit higher today, up 10 points on the day, but again, Fed signaling no rate hike. It's already baked into the cake. Bonds really don't have a whole lot of room to move with the interest rates only increasing at a ratchet of about 0.25 or a quarter of a basis or 25 basis points, and bonds have that priced in already. Then onto the Dow Jones Industrial Average, slightly off on the day, even though it looks like it's a little bit positive here. It's showing that it's down 25. It's, for all intents and purposes, unchanged. This is a NASDAQ down 24 points on the day after yesterday's historic high settlement. The market down on the day today by about 25 points going into that meeting. A lot of people probably want to shore up a little bit of some of their positions. E-mini S&Ps continuing to be stuck in this trend sideways. Nothing to see here. It's really kind of a boring couple of weeks actually with the tight ranges and just trending sideways. This is what I'm talking about with the 30-minute chart of the E-mini S&Ps. These are 20 days back, really just kind of breaking below what we've seen recently, but at the end of the day, it is stuck in a trend from basically here to here, looking for it to want to come down and cover the gap. As a matter of fact, if we look at this chart on a daily chart, just intraday, if I can get my chart to kind of show up here. For some reason, it's wanting to pull up over there. Oh, I'm hitting the wrong thing, so let me cancel this out. Got a couple of things showing up over here on the side that don't want to cancel. I'm going to hit over here on the style button actually. If I take this out, you can see that we are looking to try and cover this gap right now. Looks like it's just slightly off of that. Hasn't covered it today, intraday, but covering that gap and this gap is something that the markets are going to really want to do. So keep those little points and figures on your docket. USO, this is a trade that I decided to cover this morning. Put this on just to get out 50% of my profit potential on this. And if you remember with USO, I had on the May and had bought the 11.5 puts and then sold the 9.5 puts. So creating a debit spread there, paid $1 for that, got out for $1.50 today, right on that economic data point from the crude oil inventories number. We got a bit of a push and was able to get out for that 50% of my max profit on that trade. Then with XLK, this is a trade that I added on. Looked like we're kind of topping out here. The technology sector has had a big run up as of late. Really, we've been talking about this. You see the NASDAQ pushing higher. E-mini S&Ps, Dow Jones really kind of starting to slump a little bit, but the technology sector and that sector rotation has happened, pushing technology much higher. I decided to take advantage of this little bit of a pullback. If we look at this doji at the top and then a confirmation to the downside, I'm thinking we're going to see at least a little bit of a pullback down to the downside. So I decided to do a debit spread because we have decent implied volatility in here. Above 30 is my benchmark for a debit spread for an ETF. So I decided to go in there and take advantage of maybe a bit of a pullback in here and sold the 55 calls and then bought the 56 calls in there for 38 cents collection there. So that was a debit spread, or sorry, a credit spread. Took a credit for that. So I didn't want to take a whole lot of risk because if it was going to pop up. Plus, I am right there, just outside of this 52-week high anyway, at 54.99. So that 55 short call is pretty close to the top. So trying to hopefully get a bit of a pullback. Apple, if you guys were watching, if you guys were watching me on Twitter, I've got marbles in my mouth or something today. If you were watching my Twitter stream yesterday, I talked about this Apple trade for earnings and went in there and did a strangle. Did it in the May weeklies and sold the 141 puts and then the 155 calls. Sold it for 78 cents. Bought it back this morning for 14. So a nice little trade there. Facebook is a trade on the docket that I'm going to be looking at for earnings today. So probably the only one that's really looking too good right now for me, but I'm going to look to take advantage of an earnings trade in Facebook. So follow me on Twitter at Wolfman's blog, and I'll be tweeting out what I do in any of the earnings if I find something else too. So that's about all I got for you guys today. Friday's webinar is going to be on these earnings trades and how to defend them when they go wrong. So it's going to be a really important lesson on how to stay mechanical and how to increase your probabilities of profit if one of these earnings trades goes against us. All right. So if you can't take that, take it easy.